Hello everyone, how's it going? And welcome to my channel where we talk about the most interesting and sought after titles in the market. In the world of investing, people are often asking themselves, where is the next big thing? Where is the tidal wave? And how to accurately seize the opportunity before it takes off? And finally, how to profit from safe, predictable income streams. Preferably all of these simultaneously. And it is precisely to answer those needs that the title SCHD has been created. It is an ETF that correlates with some of the world's most famous and successful companies and distributes dividends from the stocks incorporated within it. To a large extent, the Schwab US Dividend Equity SCHD chooses the safest and the most stable industries and also like the most successful ones in our economy to invest for the long term. Perhaps another reason why SCHD has attracted so much attention from the market participants is its price action since its inception, as well as its dividend track record. Over the past 5 years, despite strong economic headwind, the Schwab ETF managed to increase its share price by almost 50%, which in that regard alone has already beaten many of the more riskier counterparties. If we go back as far as 2011, when it first began trading, SCHD increased by more than 183% since its beginnings, which really shows how far the stock has risen. So, of course, with that being said, looking at what SCHD has delivered over the past decade, we can say with certainty that it is known for its stable dividends along with an obvious growing potential, with its dividends growing by almost sixfold since 2011. Another reason for its popularity within the market is the growth of the ETF's unit value. If the market may have had up and downs, the ETF has definitely more things to show on the bullish side than the opposite, benefiting from not only the bubble years of the quantitative easing, but also the latest stock craze just a few years ago. Its yield is currently around 4%, which can be seen as decent given the current market conditions, while also offering an exposure in the equity market. With that being said, let's also take a look at the technicals of the stock. The trading volume of Schwab US Dividend Equity ETF has recently been around 3.2 million shares, compared to an average volume of 3.6 million shares. Over the previous 52 weeks period, the price fluctuated between $66.67 and $78.73. The volume of shares traded tells us how many shares are being bought and sold at any given time in the market, and if there's enough liquidity to support a trading strategy. If the float is thin, it would be very easy to influence the stock price, but low liquidity could mean that the demand is limited as well. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. For instance, if the stock were to break through, the current volume would be significantly higher than the average volume. The asset under management of Schwab US Dividend Equity is currently around $42 billion. As we compare the current price to the historical price fluctuations, the stock is 6% higher than the 1-month low, 9% higher than the 3-month low, and 9% higher than its 52 weeks low. On the options market, which often gives a hint on the market sentiment about where the stock price is probably going to go next, the implied volatility is 11%, compared to a historical volatility of 14%. The put-call volume ratio is currently around 45%. It is normal for most stocks to tend to have a higher put option volume than what they deserve because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is 1.1 thousand contracts a day versus the 30-day average of 2.8 thousand. In terms of open interest, the most recent volume of open interest has been around 60,000 contracts versus the 30-day average of 64,000 contracts. Regarding the shareholder structure, institutional shareholders own about 40% of the outstanding float, mostly as a result of long-term holding. It's always good to see some institutional participation in a title when you want to hold the equity for the long term, especially as it offers a layer of stability and reliability. It also means that the market believes that this ETF in particular is going to deliver its value in the long run, which is an important factor to consider for long-term holding. Now, I personally consider the minimum threshold to be around 25 to 30% for institutional ownership, with, of course, many exceptions in mind. There will always be great companies mostly owned by retail traders after all. The current short interest is about 0.06% of the total float, 50% of which come out of the dark pools. In other words, there's close to no interest in shorting SCHD, which is probably good news for those of us who are owning this title for the long run. Now, my recommendation for SCHD overall is to keep a modest position in your portfolio and to follow up with the progression of the interest rates in the years to come. If the interest rate were to decrease, SCHD may see its demand growing up once again, given how demand for equity is negatively correlated with the baseline of money's yield in the bond market. I would recommend to commit between 10 to 15% of your portfolio in SCHD, and would also recommend to split the allocation in batches of 20% at a time over the next 12 to 24 months.